training, which basically walk through a little edge we have where a stock doesn't need to go to the moon. In this case, this was a trade we had in Robinhood. It just needed to go above the better than flat, basically, over the next week to double our money. And that's what happened there on Robinhood. Here was another one we did on GEV. Again, with the wrap order I was using, needed to do better than flat to double our money. That one happened. We did one on Meta. Now, let me just be clear. I'm taking a loser on Meta today. I actually, well, unless something crazy happens here in the last 15 minutes, I'm taking a loser today on Meta. But I do want to show you guys something really, really cool that you can apply the wrap order to that stacks up a lot of money, or has in the past. I can't predict the future, but in the past, stacked up really nicely over time. And it's with these wrap orders. So let's take it all a few steps back here. And let me just start by asking you this. Which trader makes more money? And this is something we covered in the opening playbook, I think twice. Now we want to do it in the closing playbook. So which trader makes more money? Feel free to post in the chat. If you've already done this exercise, please don't post in the chat and front run everyone. Dinosaur skip. You already beat me to it. Which trader makes more money?
You're definitely going to get some front runners in here.
Yeah, trader 1 with a win rate of 99%, or trader 2 who wins 60% of the time. Who makes more money? Well, you guys are correct in the chat. A lot of you guys said it depends. You are correct to say it depends. But let me go ahead and give you guys some more information. Trader 1 wins 99% of the time with a 4.95 profit factor. That's pretty outstanding. Trader 2 wins 60% of the time with a 1.5 profit factor. So now we know the win rate. We know the profit factor. Who makes more money? And I'll give the chat. I know we've got a little slight delay on the chat, I think, on my end, but give you a second here. So Safta says number 1. Roger says number 1. Carol says number 1. Carlos says number 1. Right. You'd think they win 99% of the time with a 3 times better profit factor. They better be making more money. Well, as we break it all down, trader 1 has a 4.95 profit factor. His winners are 5%. His losers are 100%. Gives him that beautiful looking profit factor. But after 100 trades, he's making $3,950. So assuming someone put $1,000 in each one, no compounding, nothing like that, just staying consistent. Trader 1 wins 99% of the time, has almost a 5 profit factor, makes $3,900. Trader 2 wins 60% of the time, far worse. Profit factor 1.5 looks far worse, but his average winner is much bigger, making his average return much bigger. After 100 trades, he makes 5 times the amount of money. Trader 2, again, wins 60% of the time, makes 20 grand. Same starting stake, $1,000 in each. How can that be? Again, we're looking at this and we can now decide that profit factor and win rate obviously don't mean overall who's making more money, because trader 1 has far better numbers than trader 2, but is making far less. What really matters, in my opinion, when you're looking at a strategy is the average return per trade. Average return size matters more than anything else, in my opinion. And then the next thing is how often you can repeat that. So here, trader 2, while he does not win nearly as often, his winners are so big that his winners and losers average out much larger than trader 1, who's kind of scalping, going for small profits and winning a bunch. Hopefully that sort of makes sense there. So let's quickly debunk the profit factor myth by breaking it down a little step further. So again, we're going to imagine 100 trades for those 2 traders. After 100 trades, trader 1 winning 5% each. He's kind of scalping for 5% gains, makes $4,950. Trader 2 is going for 100% gains. He's always targeting a double, which is what I do with my wrap orders. If you were at the training, you know we're always going for that 1-to-1 risk to reward. That's what trader 2 is doing here. He makes $60,000. Now let's put in the losses. Trader 1 only loses one of those trades, but that kicks out $1,000. Not too bad. Trader 2 loses $40,000. And that's how you get the profit factor. The gains divided by the losses, 4.95, 1.5. Looks way worse, but who's happier at the end of the day? Who's the one making more money at the end of the day? Trader 2 by a mile. So trader 2 is 5 times more profitable than trader 1, with a far worse win rate and a far worse profit factor. And just give me some feedback in the chat. Give me a yes if you can see what I'm showing you here and how powerful that is. Or if this is kind of an aha moment or a little bit of a mind-shocking moment where you're still scratching your head wondering, is this even possible?
Well,
Or
dude, it was
how?
definitely a pretty crazy moment for me the first time we went through this. And obviously, I would have not have been fooled by the win rate one. I would have not, that wouldn't have caught me off guard, knowing that the win rate doesn't really mean anything. It's a combination of factors. But the profit factor one totally threw me for a loop the first time you sent it. You sent it over Slack. I 100% told you your math is wrong and there's no way that's possible. And then we went through it. So I guess the big question here, Graham, you said you might lose meta today on the dollar trade. So does that mean that you're not going to give up on your most profitable strategy after one loss? Because
Yeah. Is
that what you're telling us?
I am about to show you guys. I just showed you trader 1 and 2. I'm going to introduce you to trader number 3 here in just a second. Trader number 3, that's me. He's taking a loser today. Again, unless something absolutely crazy happened, he's taking a loser today. But as you'll see, trader 3 makes more money than trader number 1 and 2 combined, actually. And actually, Nate, the funny thing is, a lot of people, when they take a loser, they get freaked out and say, I need to go find a new strategy. I embrace losers. If you guys have been following my journey, like the recent one, let's talk about the 60-minute income trade. I told you guys every single time I was taking a loser, I was increasing my position size going forward because I know that mathematically speaking, a loser really is just a clear reset to the next move forward or the next winners to come, statistically, mathematically speaking. So in this instance, I'm talking about my weekly wrap orders, which I'll walk you through in a second. But I'm winning about 66, 67% of the time, 2 out of every 3 trades. So every time I have a loser, I know mathematically speaking, I'm probably due to go win 2 more in a row on average. So it's actually a pretty great time to be talking about this to take advantage. So before I get there, though, let me just be clear. Profit factor is important. It's not everything. It's not even one of my top factors I look at now. But you don't want a profit factor below 1. But isn't it shocking that a strategy with a profit factor of 1.5 can be 5 times more profitable than one with a 4.9 profit factor? I mean, you make 5 times the amount of money. Come on. Well, now I want to introduce you to trader number 3. So now which one makes more money? We've already talked about trader 1, trader 2. Let's look at trader 3. Trader 3 has a 66% win rate. As I said, this is me. This is me right now. I got 60 with this strategy, 66% win rate. If you ask most people, they'd probably say that's okay. That's kind of ugly. But that's just okay. Profit factor 208. Well, that's pretty solid. Average winner. These are based on real live trades over the last year and a half. 93% average winner. We're always shooting for a double each and every week. We are averaging 32% per week of winners and losers. Like I said, to me, this is the most important number. Winners and losers across the board, we are averaging 32% a week. After 100 trades, we are averaging $32,000 in profit based on $1,000 starting out. No compounding, no scaling, nothing like that. Just blindly taking these mathematical odds, these statistics we have, using them in our favor and doing it week after week after week after week. And again, like I said, I am taking a loser today. Unless Meta is going to jump $5 here in the last 7 minutes of the day, which I don't think will happen, I'm taking a loser. That happens. And I embrace those because I know that means I'm winning 2 out of every 3 trades. So when I take that one loser, I'm probably got 2 winners on the other side, kicking off and keeping this progression going. So the question is right now, which would you rather be? Trader 1, hey, there's nothing wrong with being trader 1. If you want to win all the time, be my guest. You just might not make as much. That's okay. Trader 2, great trader, really awesome. Trader 3, winning 2 out of every 3 trades, which doesn't sound amazing at first till you get down here. The average return is just so huge that our trades are stacking up almost 10 times better than the guy winning 99% of the time. Now, let me just say, you can't do this by trading normal options. You won't be able to find something on how this is possible on YouTube. We are using a very, very specific set of options criteria each and every day. Or each and every week, where we are essentially, in my opinion, rigging the options market to give us an unfair advantage. We are betting on the best stocks in the market to just go slightly higher in a week. And a lot of times it's like 0.5% higher that week, not 5%, not 1%, a 0.5% higher, and we double our money. Now it can go much higher than that, or it could go 1%, 2%, it could go 0.5%. We are doubling our money on the best stocks in the market, just moving in the direction they're already heading. We don't win every trade, but over time, you can see just how powerful this is. So who'd you rather be? The one making $3,900 after 100 trades, or the one making $32,000? Again, not a hard decision to make, but I want you to rewire your brain and how you think and how you approach your trading strategies. Instead of getting scared when you see a loser, you embrace it, knowing that when you have a winning edge, that is the time to be getting most excited. All right.
Well, and Graham, it is worth noting, you just said it there, but just to be extra clear, there's no fudging the numbers there. That's the same amount of trades. It could be the same holding time. It could be the identical risk. It's not like we're taking trader one, putting all the stats and saying, oh, and they only risk $500. The other, like, it's all identical. It's just average winner that is the impact. And that's where you get the crazy overall returns.
It changes everything. It absolutely changes everything. And again, this is not based on a back test. This is based on, I think we're at like 20 months of live trades now. So almost 2 full years of live trades based on real-time live trades. Here's what we're looking at right now on the exact odds that we have. So again, number 3, that's not based on a hypothetical trader. It's based on a strategy that I've been using for a few years now. I've been using it for years and years. We've been publishing it for about 20 months now. And it's my favorite way to trade weekly options. So if you want to learn how to be like trader number 3, you don't expect to win every single trade. Going in, statistically speaking, you're winning about 2 out of every 3 trades. And while most people might not, turn their head around at that, when you look at the average winner, we're going for the same thing every week, right around a double. That averages out winners and losers and really nice weekly return that stacks up over time, big time. So again, if you would like to learn how to do that, well, we are going to take you through that class right now here in just a couple of minutes. But let's go ahead and open the chat. We've got a couple 3 minutes till the closing bell here. Nate, do you have anything else to add? What is the average trade amount for that 32,000? Good question, Maria. Each of these examples are based on the same thing. We're saying every single trader starts with $1,000. They don't compound. They just stay consistent. Just starting with $1,000. What happens after 100 trades? Trader 1 has these really pretty looking stats you'd see on a poster board. He's not even making that much money, though. I don't want to say they're misleading. They're not misleading. These are good, valid numbers to know. But a lot of people assume that these are the most important numbers when it comes to trading. You ask me, flip it. Those are like the least important numbers. The most important number when it comes to trading is your average return per trade. And right now, with what I'm about to show you, we're averaging 32% a week of winners and losers. And that's because our average winner is 20 times the size of what this guy's looking at based on real numbers, real data right now. Z, you must love to lose like a champion. Exactly. I love it. Again, rewire. You got to rewire your brain if you're just winging it and you're losing, I'm not going to tell you how to feel. But when you have something with a proven edge over time that over the long haul, the good outweighs the bad, then you need to rewire your brain to embrace the losers. Losers mean good. Statistically speaking, losers mean good things are about to happen. Let's see.
Oops. I do think this is where there's kind of like a hard conversation to have, which is that I have probably talked to dozens, maybe more people who say like, oh, I tried this other strategy, it was a scam or it didn't work or it was, whatever. And honestly, probably what happened is you took a couple of trades and you got a drawdown and then you lost. And in reality, it probably, a lot of the times would work. Not that there's not people peddling just bogus junk that doesn't work, because that's definitely happening all over the place and it's super unfortunate. But the reality is there's lots of winning strategies that people turn into losing strategies, just based on timing or doubling their risk at the wrong time. I unfortunately had someone who said they were trading overnight options. They won 7 trades in a row, and then they 5x their risk before a loser we had 2 weeks ago. And so in their mind, that's a losing strategy. But obviously, it's not a losing strategy. It has to do with the timing of risk management, things like that. So that's, to Graham's point, you have to have a proven edge. Then you have to be willing to execute it. And the most important part of executing it is obviously shaking off losses and continuing to move forward. I can't say that I'm quite at Graham's level where I'm excited to take losses. Maybe I'm not as mature as Graham yet. But I am definitely at the stage where it's part of life. It's kind of like, oh well, move on. Just kind of a mechanical part of the process. And I think that's one of the most important things you have to achieve as a trader. If you want to have consistent success, you literally just have to get over that hump, one way or the other, where you can move forward. Or else you're always going to be in that cycle of trying something new, taking a hit, trying something new, taking a hit, and kind of always bottoming out and getting the worst outcomes possible.
Mm-hmm. Yeah, and the really cool thing about this, and I know everyone's talking about the 60-minute income strategy. That's the one that's been a blast to trade. Very similarly, like it's not an emotional game here. We are just playing mathematical odds, sticking to the system, sticking to the rules, and letting it do the work for us, taking our emotions, our fear and greed out of the equation, and just following the system. In this case, if you were at the Rapport training last week, you have a good idea of how shocking this actually is. But we're basically taking the best stocks out there, and they can move a couple of bucks in a week and double our money. For example, like Meta, for example, right now. Yeah, typically when I trade Meta, it can move about 0.2% or more and double my money. If you guys know how to double your money when a stock gains 0.2%, please let me know. I think this is the only way to do it. And that's what gives us this edge here. Again, I don't think most people even know this exists. I would bet that and I'm going to make up a number, but I would bet that less than 97% of traders, or less than 3% of traders, know about this. And I can't believe it's not taught more, because it truly is maybe the most shocking thing in finance. At least that's my opinion. And that actually, this strategy here gave birth to how we've been trading the 60-minute income trade. If it weren't for understanding this first, we would have never been able to do the 60-minute income trade. So guys, we are going to get that going for you guys. Markets are closed officially for the weekend. Good solid week out here for traders. Nate, I don't know if you've got some things to celebrate. We're 6 for 6 on the 60-minute income trade. So that's great going into the weekend. It was a $12,000 week for me, which is pretty awesome.
Dude, the only thing I'm upset about is that I didn't trade any of them with you. I got so busy on my own stuff that I missed all the 60-minute trades this week. But it's still been a lot of fun. I don't know if I told you. I think I might have been during opening playbook. We had our automated option trade hit, so that's 14 for 15 there, and 4 for 4 on overnight options this week, and a couple other good ones. So it's been a lot of fun. It's been a blast. Hopefully, everyone in here is taking full advantage of the kind of markets we're in, because let's be honest, the markets since April do make life easier, right? You want to have an edge that works regardless, and then you want to take full advantage when the markets make life a little bit easier, which they have. So hopefully everyone's kind of enjoying that, taking full advantage. Graham, I love the fact that you said, "Hey, I'm looking at a loss on Meta," but doesn't make me shy away one moment from saying this is still a great strategy and one to take advantage of. And I would agree. I have to give Graham a lot of credit, because what he started building with dollar trades here was probably the first. Graham, you could correct me if I'm wrong. Probably the first time that you and I got on a Slack call and said, "Oh my goodness, like the market is almost like this is like a hack, like a real hack, not like a oh hey, if you curve fit Apple, you make money hack. Like this is like the market is broken. You can make 100% on tiny moves." And since then, we've shifted almost every strategy, almost every piece of research into that sort of structure, including all my flagship services, because the advantages cannot be found in any other structure. And then what you've done on this strategy, like you just mentioned, obviously, tie it to the best stocks, make them move as little as possible, go for double ups, and get that big profit factor. So actually, I shouldn't say profit factor. I should say average return, or whatever number we're going to use.
Like true profit. Yeah.
Yeah. The true profit. So
is very, very big. So again, we'll play that for you guys. It's a very passive way to just go after these pretty consistent opportunities each and every week. Place to trade on Monday. So I know today's Friday. Markets are going to, the close now. But stick around, watch this presentation. Monday morning, I'll have a new trade for you. And we just do the same thing each and every week and let it go and let the results stack up over time, knowing that we have a huge, huge edge